Hi guys, and welcome to another episode of this weekly alts analysis series where we take a look at some of the most popular altcoins in the market and show you how to easily identify key levels of higher time frame sports resistances so you can either dollar cost average in or take some longer term swing trades. So on this week's episode we're going to feature a few requests that we had from the last video. So we had a couple of comments on the last video which we really appreciate, asking us to go through DOT and NEAR. Another request for NEAR, and also PLU and Swissball. So we're going to go through those today. But first we'll take a quick look at BTC. Near the end of the month, 3 days to go. It's been pretty sideways all month, really, to be honest. Not much action. A little bit towards the end, last couple of days. Take a look at the weekly. We held that 19k weekly level yet again last week. And as I say, we've had a little bit of a rally this week. If we go down to the daily time frame, we actually made a pretty significant daily close on Wednesday over this 20.4k daily level, which we hadn't got over since the 12th of September. So pretty significant. However, it's looking at the moment like it was just a deviation, a big old fake out as we've closed back below and we could be dropping further. I think it's probably something to do, or partly to do, with the poor earnings and the S&P having a little bit of a dump. But yeah, not looking too good, so wouldn't be getting too excited just yet. Hopefully, as I say, not much has happened this month. Hopefully next month we see something a bit more exciting in November. Obviously getting right into the depths of Q4 now. So yeah, be pretty interesting to see where we end up as we go towards the end of the year. But as I say, this week we're going to go through DOT, NEAR, PLU and Swissball. So quickly go through DOT. We've already featured this. What I'll do at the end of the video, I will link the original video where we actually broke down .USD and .BTC, so you can go back and see the analysis as we did it. But we've already got this one marked up, so we'll quickly go through it. At the moment, .USDT is right on the top of a really nice accumulation area. This monthly support level between $6, about $6.25, and let's call it $4. If we go onto the weekly time frame, you can see it a little bit clearer that this was a massive accumulation zone between August 2020 and then December 2020 before we had this big breakout. So as you can see, a lot of accumulation happened here, and we're just entering this box now. So personally, if you like DOT as an asset, I think over the next couple of months, particularly if we stay in this region, really good risk reward for loading up. And as you can see, it's about a 10, if we just go from the middle, so call it $5, it's pretty much 10x back to all-time highs if it gets to all-time highs. Obviously there's no guarantees, not financial advice, all that good stuff, but yeah, in terms of risk reward, looking really good. Just entering this big old support box there. .BTC, again, if we go to the higher time frames, you can see we've actually already touched the top of this monthly support range between, call it 3,000 sats and 2,750 sats. You can see we had a nice little bounce off this back in May and June. We're coming back into this box again now, which is, in terms of candle bodies, actually all-time low, down at $2,700. In terms of monthly candle closes, obviously we have wicked lower. But yeah, so again, pretty decent risk reward. You can see it's stuck in this range between these two monthly levels. We go to the weekly again. So as you can see, this week we had this nice little bounce. Personally, I think we could go deeper into this monthly support range, and as I say, potentially down to about 2,700 sats. So again, a really nice area to be picking up some .BTC, in my opinion. Next then we'll go for NEAR, and we'll mark this one out together. So we will start on the monthly time frame as always, get rid of the magnet, go for the box rectangle. So straight away, first one I'm looking at is down here, so the bottom of this wick, monthly candle wick of July 2021. It also lines up with the October 2020 candle wick as well. So if we just put that across there, probably go, I think what I'll do is I'll go from the candle wick bottom to the candle body bottom, drag that across, give that the old monthly tag, Happy days, that looks good. So an area between about $2 and $1.60, more or less. Should be a nice little area. And then in terms of resistance just above, I think the top of this candle wick here from last month in September, and then if we drag that across, just there, probably up to these candle body closes here. So candle body close of March 21, April 21, and then candle body closes of May 22 and June 2022 as well. That looks good to me. Give that a monthly, and we might refine these levels a little bit as we go down to the weekly, but that'll do for now. In terms of the monthly time frame, weekly. So yeah, this looks good actually. This top monthly range, sorry I didn't say the price, so top monthly range of resistance about $6 to about $5.50. But yeah, that range looks pretty spot on. And in terms of the weekly, again, you can see lots of candle body closes and wicks in and around this monthly support zone between $2 and $1.50, more or less. In terms of weekly levels, I actually see one right here. So my eyes straight away see these candle wicks here, May 2021. And if you look right, you can see that it's support here in June and July of this year, and we've just flipped it to resistance by the looks of it. So if we go top of those candle wicks, drag it across, just make it big for now so I can adjust it, turn it into a weekly, and then we'll just refine it a bit. So literally going from candle wicks of June 2021 to the candle wicks of May 2021. So this range is about $3.31 up to about $3.64. And as you can see, in fact, I'm just going to make it slightly bigger just to catch these candle body closes from June and July of this year. And as you can see, we broke through this level back on the week to the 10th of October, and we've just flipped it to resistance by the looks of things. So it's looking like we could see near head down to about that $2 range, which again, if you like the project, fantastic risk reward, especially when you know it's 10x again, look back up to $20 if, as I say, if it gets back to all-time highs. No guarantees, but yeah, if it were me looking at buying near, I'd probably be holding out until we get down to $2. Maybe, obviously, you can dollar cost a small amount in, but I wouldn't go swinging heavy personally, because it looks like we could be dropping down quite a fair bit lower. In fact, let's take a look at percentages of that. If we were to go back down to $2, you're looking at about 27% there. So that is not to be sniffed at all. Let's have a look at near BTC then. Starting on the monthly. Ooh, that's had a bad couple of months, isn't it? So straight away, I'm looking at this level here. So top of April 2021, where we've got these candle wicks, and again, it lines up quite nicely with these bottom candle wicks of October 21, May and June 2022. So let's go ahead and grab those. Nice. Give it a monthly. And yeah, I think that pretty much nails it. So as I say, top of that candle wick there, April 21, and that is between 13,750 sats and about 12,500. Yeah, I think that's it really in terms of monthly levels. Obviously, we've got this resistance level up here. Well, we could mark it out, I suppose. Let's give it a quick copy paste. I would probably go just there. Look, perfect. So it lines up with this candle wick here as well on the 1st September 21. So that is between 24,400 sats and 25,500 sats, but probably going to be a while before we see those prices again. Next level for me, as I say, it looks like we're going to come down into this 13,700 to 12,500 sats range, which we bounced off previously, not only back in October 21, but also May and June of this year. So interested to see if this holds. If it doesn't, then we could see it come all the way back down to about 5,000-6,000 sats, but one step at a time. We'll see if this level holds again. Moving on then to PLU and CHSB. Now these are going to be pretty quick because there's not a lot of data on them, and PLU is awful to try and chart. As you can see, monthly chart, it's very wicked, very low liquidity pair. So that's where you get all these crazy spikes. Wouldn't even bother trying to do the monthly. I would just go down to the weekly, and then you can start to see some quite clear levels. So straight away, looking at these candle wicks up here, back from March 21, and if you go across, it lines up with these candle wicks here in May 2022, and also back in October as well, I think. But let's give that a box. So I'd say just about, I'd say there actually. Don't make them too big. Go weekly. Yeah, happy days. And then in terms of, we've got like a bottom level down here, as you can see, down at $3. So again, let's just copy paste that box, bring that down to the bottom. Happy days. And then somewhere in the middle, I'm looking at this level that we're sat on right now, actually. Let's go just there, I think. Might be a little bit big, make it a little bit narrower. That looks good to me. So as you can see, plenty of candle body closes, candle wicks, support resistance, constantly being tested and then flipped from switching from support and resistance. As you can see, we're currently sat on it right now as support. So just drag those out. So yeah, the current support range we're sitting on between about $9.30 and $8.50. Lose that, and in fact, actually, there's a better level there. I'm going to move this up. Actually, this bottom one, just to there. That actually looks a little bit better. I'm going to make it a little bit smaller. That's it. And the next level, should we lose that down to about $7 to about $6, and resistance up top is between $13 and $14. So you never know, we could see a bounce off this level. It's happened many times, and as I say, it's a very low liquidity pair, so that's why you get all these huge spikes. So wouldn't be surprised to see a bounce back up to $13, $14, but if it does, I'd definitely be taking profits. Every time it comes up to $13, $14, you should really be looking at taking profits. Look how many times it's happened. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times since, what's that? Well, January of last year. So, and every time it's always retraced. So always, I'd say always have a swing bag ready to sell if ever it rallies up to $13, $14. And then Swissborg, again, no point looking at the monthly because it is just all downhill, as you can see. But in terms of a weekly, you've got two really clear levels here. If we bring it down, so we've got this sort of range high up here between about, what's that, 21 cents and 24 cents. Make that a little bit smaller, bring that over here, that's it. And then you've got the basically all-time lows just below it, which is down here at, let's make it a little bit smaller. Yeah, which is about, what's that, 14 to 16 cents, give or take. So yeah, pretty simple on a Swissborg. If it breaks below that, then goodness knows where it's going to go. But it's pretty much stuck in between these two weekly levels here. And it's one of those, if it comes back down to 16 to 14 cents, you can buy some. Just be ready to get out of there if it does close below 14 cents, because that could be another big leg down. And if it does rally back up once it's hit 14, 15 cents, we're ready to take some profits at 21 to 23 cents as well, is what I would say on that. So there you go, guys. There's some requests for you. If you've got any more, once again, drop them in the comments below. Really appreciate them. Once, as I said, with Dot, I will tag the original analysis video, so you can go check that out and see how we picked out these levels. But enjoy the weekend, and we will see you again next week.